Hello, it's Mike here, live from PDAC 2014. I'm here with Mickey Fulp, the Mercenary Geologist. Thank you very much for having this interview, Mickey.
Thanks a lot, Mike.
So, jump right into it. Your presentation at PDAC ended with a different note than we're used to seeing at these conferences. You talked about geological catastrophes. Why the doomsday theme?
I figured by the end of that day-long session, people were tired of hearing the same thing about fiat currencies and bear markets and inflation and deflation and what's gold going to do and stock picks. So I thought I'd shake it up a bit, and I did a piece on geological catastrophes that will happen all the way from 1 year out with the usual earthquakes to the end of the solar system when the sun cannibalizes the earth and becomes a white dwarf. But I ended on a positive note and said by that time we'll have long left this planet for another blue-green planet, and we know about a bunch of those in our galaxy now. So I'm fully confident that we will make the technological advance to colonize another planet long before the Earth is gone.
Sounds good. What was the reaction? Did you wake people up the way you were hoping to?
Certainly, and I think the optimistic end of the talk kind of gave people a little bit of a uplift because it is probably a fairly depressing talk in the fact that all these things, there's 15 of them going to happen, not in our lifetimes, of course, but in the course of geologic time.
Sounds good. All right, so since the beginning of the year, the markets have been looking up. There seems to be a little bit of optimism here at PDAC. What's your take on the market situation? Do you feel that kind of optimism?
Well, certainly. We've been up. Last time we talked in Cambridge House in January, the market had been up for nearly a month. Now we're on a 2-month roll. We're up probably 15% from the low in mid-December, so that's encouraging. But this is not a broad-based rally. This is the good companies, the cream rising to the top. Most of these juniors are still in a world of hurt, and like I keep saying, I think a bunch of them need to go away.
Right, so still 500, do you think that will eventually not make it?
Well, I would hope so, but one of the problems we have is the TMX, the owner of the stock exchange, is a publicly listed company, and it has a vested interest in keeping these companies around for the filings fees and the compliance fees and everything that involves, because that's the way they generate their money and profit for their shareholders. So they keep throwing the juniors lifelines, making financings easier, lowering the terms, and personally I don't think that's very, very good for our business in either the short term or the longer term.
So what do you think about what Ned Goodman and the Canadian Securities Exchange are doing? Because they're all about lowering regulations, lowering fees, that kind of thing. Is that good or bad?
Oh, I think that's good. I'm a free market libertarian, so I always think competition is good in a capitalistic society. I would hope that will succeed. From my knowledge right now, they have about 200 listed companies, but there's not much liquidity in that market right now. And that market actually has been around for a number of years and has failed to gain traction. But the business model is good, and I wish them all the success in the world. I think that would really help what goes on in our business right now.
Good stuff, thank you. So, of the companies that are left, if 500 are going to go away, what types of companies should people be looking at of the ones that are going to make it?
Well, you need a good share structure. Most of these companies have blown out their share structures. You need tight share structure. You need management that's been that has experience in this business and has been successful before in this business, not a string of failures. Most importantly, you need a good project, and that's part of the problem. There's a dearth of good projects in the world compared to 1,600 or more companies. We don't have that many good projects. And finally, they need to have some cash in the bank or the ability to raise money without severe dilution.
Okay, great. So in last January, you were bullish on uranium. And while some of the uranium companies have started to come up a bit, we haven't really seen the move in the spot price. Do you think there will be a catalyst, or any catalyst you think that'll happen that'll get that to the spot price to move?
Yeah, the catalyst is going to be the restart of some Japanese reactors, and the market is waiting for that. The psychology of the market is very much primed for that. So yeah, I went bullish on uranium a year ago, and I accumulated some uranium stocks, and we've done quite well with those stocks. And so when the spot price starts to move, I think you will see the stocks react even more. But they've kind of front run the anticipation of a higher spot price for uranium. You know, people can't make money at $35 uranium. Even the cheap ISR producers in the United States are best break even at $35 uranium.
Right. So we've heard out of Japan that some of the reactors are working their way through the process to get back online. Any thoughts on when they'll actually turn the switches on?
Well, I think there'll be some turned on this year. I'm hopefully optimistic about that. I think that the consensus amongst uranium analysts of 6 or 8, I think that's very high. I'd just be happy with, by the end of the year, if we have a $40 spot price and a couple of Japanese reactors making electricity, I think that would be fine for the market.
Excellent, great. So another company that you've talked about recently is Arupa Minerals.
Yes.
They're a prospect generator, I guess focused on Europe. Can you tell our audience what your thoughts are on the prospect generator model in general?
Sure. A prospect generator is a company that has an expertise, a geological expertise in a particular part of the world or a particular deposit type, and their modus operandi is to do greenfields, grassroots, reconnaissance style exploration, find good prospects, take them to a certain point, basically to a drill where they're ready for a drill phase, then joint venture that to another company. So you're essentially spreading the risk around with a bunch of projects and using somebody else's money to drill them. And in Arupa's case, they are the operators, so they're using their geologists, getting a management fee. So it's a way to get a broad, a very widespread bang for your buck, if you will, and not have to do repeated equity financings and dilution. It's worked very well for Arupa.
That's great. And at the end of February, they announced they'd discovered a massive sulfide discovery in the Pyrite Belt, and that's in Portugal, isn't it?
Yes, it is.
What's the significance of that?
The Pyrite Belt of Spain and Portugal has some of the highest grade and largest polymetallic, but really dominated by copper and zinc deposits in the world. So we have companies like Rio Tinto involved, in Lundin Mining in Portugal, Rio Tinto in Spain. And the district in Spain is actually called Rio Tinto. It's the founding mines of Rio Tinto way back when. So these are very rich, very high grade. The significance of this is there has not been a new greenfields discovery made in the Pyrite Belt since Neves Corvo over 20 years ago. So this is very significant. It was found blind under 100 meters of gravel cover. So we're very excited about that. Arupa's stock price has moved considerably, up from 11 cents to a high of 20, settling in around 18 cents. So It's a company I cover, it's a company I own, and my subscribers are very happy. We wrote this up about a month or 5 weeks ago, and the discovery was made and announced last week.
Yeah, right. So how do you go about finding a massive sulfide under all of that gravel? I mean, is it geophysics, geochem?
No, it was really good geology. So they've, in geologic terms, they've reinterpreted the geology. If in layer cake geology, the sedimentary sequence was viewed to be wrong, and they kind of flipped that around and came in with a new interpretation, and it panned out. So, yeah.
So just expert geology and going at it a different way.
Yep,
that's great.
Exactly.
Okay. You've been involved with the resource sector for many years. What lessons can you share with our audience looking for opportunities in the market and the way it is now?
Well, this is a bad market, still in a bear market. We're starting to see some life, but you make money in this business by being a contrarian. You buy stocks when no one else wants them. And so I would encourage the retail lay investor especially to try to do some good research, have no fundamental reasons why you want to buy a stock, and if those reasons don't pan out, sell that stock and go on to another. This is a high risk, high reward venture, a business, and you will not be successful all the time, but the amount of money you can make with occasional successes will more than cover your losses on other stocks. So don't be afraid to buy and sell.
Excellent. Well, thank you very much, Mickey. That's really helpful. This is Mike Roger of INN here with Mickey Fulp at PDAC 2014. Thanks very much.
Thanks.